In this section, we're going to talk about the interest petty cash funds. Petty cash is money you have left over in the business for small incidental expenses like postage stamps or envelopes, or maybe even to buy coffee for the office or donuts. Speaking of donuts, don't get one in my class. I give those out free. You can get them glazed, you can get sprinkles on them, you can get them plain. But donuts are not desirable in my class. Back to live action. So petty cash is used to pay low-cost routine items when the preparation of a check would be inconvenient or inefficient. And you're basically using petty cash just to support those incidental things that occur from day-to-day transactions. The way you establish petty cash is simple. You simply debit petty cash and you credit cash. That is the way to establish or create a petty cash fund. Very simple. Debit petty cash, credit cash. Now, think about it. We talked about the 5 current assets. We have cash, accounts receivable, marketable securities, inventory, and prepaid. You will add petty cash as one of your current assets because it's used and established to now be able to handle those small things that you don't want to write a check for. Now you've established it. So let's just say, for example, you went out and you paid for a bus ticket, a Greyhound ticket of $20 to somewhere, and you bought a bunch of donuts for the group, and you paid for some postage. So now you got postage, you got travel, and you got entertainment. Postage, travel, and entertainment. 3 different expenses, and let's say the total of it was $60. Now you need to replenish petty cash. First thing you'll do, get the receipts from those items. Next thing you do is reimburse those folks who spent those items or reimburse petty cash. Here's how you do it. Very simple. You will debit every expense, and in my example, you had travel, you had entertainment, and postage. You would debit the 3 expenses and credit cash. That replenishes petty cash to its original amount. Very simple. You will debit the expense and then you'll credit cash to replenish the petty cash and keep petty cash on the balance sheet at all times to its original amount. The next thing, which is really quick, is cash over insured. In many controlled systems, what happens is you'll go to a register and you'll count the register out before you start the day. I got 10 10s, I got 20 50s, etc., etc. Your register should count out before you allow somebody to get to the registers to know I got X dollars in my register. So let's say an example, you got $1,000 in your register, you got the cashier who is now using that register for the day. You look at what's recorded as sales, you look at what you start out, and then you look at what you end up in the register. So let's say the register is short. The register is short. Errors occur. Maybe they recorded a sale more than it should have been. Maybe they did not count the cash the way it should have been counted. But at the end of the day, it's short. You now need to replenish that for the shortage. You will then debit the expense and you will credit cash for any shortage in the cash register. Similar to petty cash, but again, you are reconciling the cash in the register to the sales and to what was given out in actual cash. Next, we'll move into bank reconciliations in just 1 second.